All right, guys. So let's quickly talk about the UK jobs data that we have coming out tomorrow at around 8 a.m. So this one is going to be coming out pretty early. So you want to actually make sure you are available to trade this because I feel like it can actually offer very decent volatility depending on how it comes out. But something you want to notice when you have a lot of these data points coming out, like when you have more than like two or three, there is a possibility to see what is called mixed data. So mixed data is when you have uh, one particular data or one particular event coming out higher and then the other one coming out lower. You don't want to see that because that's going to be mixed. You don't know the one, you actually don't know the one in particular that markets are going to pay more attention to. So my best scenario or my best outcome for a mixed data is to just stay away and come back to trade another day because times like this are where you really don't want to mess with the markets. You really have to be sure, you really have to make sure you know what you're doing. So jobs data for the UK is actually quite different. For the US, we have unemployment rates and same thing for the Aussie and for the Kiwi, but for the pound, which is for the UK, you have the ILO unemployment rate. So it's typically the same thing. If it comes out higher, that's going to mean pound weakness, and if it comes out lower, that's going to mean pound strength. But it's inverse for the employment change and also for the average weekly earnings 3 months year over year, and also the average earnings X bonus. So I'm going to start with the unemployment rate because this one I feel is actually going to be interesting. So taking a look at the table and also taking a look at inline outcome, which is the forecast or the consensus, so to speak. So markets are actually expecting this to tick up from a 4.0 to a 4.1, which means markets are expecting an increase in unemployment rate. And the minimum here is 4.0 and the maximum is 4.3. So let's take a look at what I want to see for a dovish outcome. So I actually went for 4.3 or above because the 4.3 is above the prior, which is at 4.0, and is also a clear outlier on the chart. And I'm going to pull up the forecast distribution. So this is the forecast distribution. This is how the different voters of the different banks and financial institutions voted for this data. So you can see a lot of participants here are expecting 4.1, which is the forecast, the consensus. So 4.1 is what markets are expecting it to be. So if this actually prints out as 4.1, are we really going to see a lot of volatility in the markets? No. The reason is because it's already priced in. You want to make sure you are either trading a surprise higher or lower. So I actually went for a 4.3. Obviously, a 4.2 is actually higher than the previous. It's actually higher than the prior. But on a week like this, honestly, I want to see something punchy. I want to see something that's going to make the bank say, oh, wow, okay, we are actually moving pretty high on our unemployment rate and might be time to, consider some further easing, even going to half percentage basis point, which is a 50 basis point cut for the BOE. So that's something I feel like is going to be pretty important for them if this comes out at a 4.3 or higher. I really don't feel we need to get to 4.4. I feel like a 4.3, based on is a clear outlier. Just one bank is expecting a 4.3, when the majority of them are expecting this to just go to a 4.1. So I feel like a 4.3 should just be enough. Then for a hawkish outcome, I'm expecting a 3.8. And the reason is because it's below the prior, which is at 4.0, and it's also back to the 3 handle. You know what I always tell you guys about that shift from a 4 handle to a 3 handle, or from a 5 handle to a 6 handle, thereabout. So I feel like a 3.8 is below the minimum here. The minimum here is 4.0, right? I want to see something below that. And I also want to take a look at the time series for this data. One sec, guys. So yeah, obviously anything below a 4.0 here is not going to be a new cycle low because the recent lows here is 3.8. But I feel like a 3.8 is going to put us back into these recent lows dating back to December 2023. So we haven't really been in this area since last year. So I feel like, yeah, that should be a shift. Maybe 3.7. If we get 3.7, then better for us. But I feel like a 3.8 should be able to spark those fears, should be able to, yeah, bring those sellers into the market for the pound. So that's what I'm expecting for a hawkish outcome. Then let's take a look at the employment rate. So this one is actually pretty tricky because we don't have a forecast for this. We only have, excuse me, we only have the prior to work with. And the reason is because the ONS, which is the firm that actually gives this data, we've actually heard a lot of things regarding them. Like we've been having a lot of data failure and that they actually manipulate these figures. So it's just not reliable for the BOE at this point. So I feel like that's the main reason why they didn't give a forecast, or why Reuters didn't actually have a forecast for this one. So we're actually just going to be working with the prior. And I tried to use the time series for this one as well. So let me pull up the time series. So for a dovish outcome, I was expecting a 215K or below. I want to see something punchy, guys. I don't want to just see something lower than the prior or something. I want to see something that's going to give me enough conviction. That's why I went as low as 215K. It's below the prior, which is 373K. And if we also take a look at the time series, the previous year was 378. You can see we've been pretty much rising since the beginning of this year, from March all the way down to August. So I feel like if we actually want to see something dovish, we don't want to just see something below 353 or below 300. I want to see something putting us back to this lows, something close to a 200, let's say 200K. But I actually went for 215K because I feel like, yes, that should be enough. Yeah, that should be enough for a dovish outcome, yeah, personally. And then for a hawkish outcome, I went with 422K. So something you guys need to note, I'm really not interested in trading the pound higher for this. So I actually want to look for something hawkish. I feel like a 400K and above, 420K and above should just be able to do it. Obviously, if you take a look at the time series, anything above this 373K is going to be a new cycle high. We've not had this in the past. Like, we've literally not gone higher than this. So that's the main reason why I'm actually having second thoughts about trading this data, because take a look at how close we are at coming to new all-time highs or new cycle high. So even dating back to 20 years ago, we've not had jobs number above this 373K. Maybe a lot of these numbers are manipulated, a lot of these numbers are forged, and we don't really have a way to determine that. But yeah, let's just see how the data comes out tomorrow. But anything above 373K is going to be a new cycle high. So I actually went for 420K or above. So now let's take a look at the earnings. So this one is actually very, very important because the bank has come out several times and said this is what we're going to be focusing on, the earnings and the wages number. So if we take a look at the 3 months year over year, markets are expecting this to tick up from a 3.8, which is the previous data that we had, to a 3.9. And the margin for this is actually pretty tight, 3.6 to a 4.0. So let's take a look at the forecast distribution and also take a look at the reasons why I picked this number. So I actually went for a 3.6 because it's below the prior and it's going to be a new cycle low. But before we look at the time series, I want to look at the forecast distribution. So here, markets are expecting this to tick up to, okay, one sec, guys. Let me average earnings every year. Yeah, so this should be is markets are expecting this to tick up to 3.9 from a 3.8. And I went with a 3.6 because it's below the prior and is also a new cycle low. So you can also call this one an outlier because if you take a look at the participants here, majority of them are in this 3.9 and 3.8 area. So 3.6 is it's a clear outlier on the chart and is also a new cycle low. And let me show you guys the time series for a clear representation of what a new cycle low means. So yeah, the previous number 3.8, obviously anything below 3.8 is going to be a new cycle low. We've not been this low since 2020, 2020, 2021, thereabouts. So yeah, that's what a new cycle low means. And these types of shifts actually mean a lot to the markets when it comes to, okay, yeah, this might actually be a scale. This might actually show that we are depreciating when it comes to jobs number. So that's what I feel is going to give us a dovish number. And if we're looking at a hawkish number, I went with a 4.1 or above. Remember, guys, the previous number was a 3.8. So anything above the 4.0 is going to be a shift from that 3 handle to a 4 handle. But I don't want to see just a 4.0. I want to see something above the market's maximum here. Because I'm not particular about trading the pound strength, so that's the main reason why I went that high. So I feel like a 4.1 is above the max, is above the prior at 3.8, and it's also a shift back to that 4 handle. So that should be enough for more pound strength. So if we take a look at the average earnings ex bonus, so guys, this one is actually also interesting because both these wages numbers, we want to see them coming out either above or below, because like I said, this one is actually what the BOE are focusing on. They are paying a lot of attention to this one. So for a dovish outcome, I went with a 4.5. And let's also take a look at the forecast for this one. So for the average earnings ex bonus, markets are expecting this to tick down. So you can actually see the mixed data already showing up here. For the 3 months year over year, we're expecting an upward forecast. We're expecting an upward revision rise, right? And then for a 4 point, then for the X bonus, what are we expecting? A downward revision. We are expecting this to tick down from a 4.9 to a 4.7. So you're already seeing the mixed data. But I don't want to see any of this tomorrow. I want to see something either higher or lower. Then for a dovish outcome, I went with a 4.5 or below, because a 4.5 is a new cycle low and is also below the minimum. And let me show you guys the forecast distribution for this one. So yeah, this is the forecast distribution. A lot of participants here are sticking with 4.7. And 4.6 here is the minimum. I don't just want to see 4.6. I want to see 4.5 or below. It's going to be below the minimum here, and is also below the prior. And the most important thing is actually a new cycle low. So let me show you guys this. The previous number here, one sec, guys. So yeah, the previous number here was a 4.9. And I went with a 4.5, right? A 4.5 or below, because it's a new cycle low on the chart. We haven't been this low since 2022. So yeah, that should count for a dovish outcome. Then if we take a look at the hawkish outcome, I want to be seeing a 5.0 or higher. A 5.0 puts us above the max, puts us above the prior, and is back to a 5 handle. So yeah, that should be really interesting if we do get there, but I really doubt we are going to get there. And then for your expected reactions, obviously the baseline expectation for a dovish outcome is going to be pound downside and gilt, which is the pound yields downside. Then for a hawkish outcome, same thing, pound upside and also the gilt upside. Then for possible trade outcomes, guys, this one, to be honest, guys, I really don't even know which way to go with this one. And the reason is because if we take a look at other major asset classes, right now, the AUD markets are expecting them to hold rates, right? For the Euro, markets are expecting them to cut rates. And then for NZD, markets are literally pricing in 50 basis points cut for that bank. So which pair favors me right now? So I had to dig deeper. I had to look at the internals, and I also had to look at rates pricing. So that's where GBP AUD shorts came in play. So for the Aussie, markets are expecting them to hold rates steady at their current interest rates. Markets are expecting them to hold rates for their next rates decision. But we have Aussie jobs data coming out this week. And something pretty interesting is markets are expecting a huge deceleration on the employment number. Let me show you guys. Let me just look for that. One sec. When do we have the Aussie data, guys? So we have this on the 14th. So I think that's going to be 2 days from now. So just take a look at this, right? Yeah, right here. So markets are expecting this to drop from a 64K to a 25K. So that's a huge drop. on the employment number. No forecast for the full time, but for the unemployment rate, markets are also expecting this to increase with the max here at 4.3. So it's pretty tricky because obviously, if we actually do get this dovish outcome, guys, it's going to be a massive downside. That's what I do feel. It's going to be a massive downside for the pound. But what to pair it with now is not actually the issue, because if I'm going to be holding this long term, right? If I'm going to be holding this for a while, I would obviously want to make sure I have a very good pair to back this up with. So that's why I looked at GBP AUD. I like where it is. I like where it is actually right now. And then for take profit levels, I'm going to be looking at this area for my first take profits. That's if we don't go below here before the data comes out tomorrow. And after this, I feel like the next area we should be targeting is around this 1.9352 area. But yeah, this marries up with this resistance level right here. Markets reacted to this level a couple of times, so I feel like this should be another area if we do break this one. Then yeah, aside GBP AUD shorts, the next one, or the another pair that I actually looked at is GBP USD shorts. So you can actually argue that this one has gone down. It has actually pushed down for a couple pips, but we can actually see the range bound price action here. So that tells you something. Markets are expecting a catalyst for this to push lower or higher or break this resistance zone or this support zone. So I do feel like tomorrow, if you get something punchy, then it should be enough for more downside on the pound. So for take profit levels, guys, this one I really don't know, but at least this level should be a good first take profit if you are looking to hold this one. Yeah, this marries up nicely with let's say we stay here before the data. This should be around 50-60 pips, give or take. And then if you're actually looking for something more, holding towards the CPI data on Wednesday, maybe this level should also be enough, you know, just letting it ride actually. So yeah, this is all I have for trade outcomes for a possible dovish scenario. But a hawkish outcome, like I said, I'm not interested in trading the pound any higher, to be honest. But if we do get an overall punchy data across the board, if we get employment coming out higher, if we get unemployment coming out lower, I do feel like maybe GBP USD buys should be something to look at. And the reason is basically just because of positioning. And let's take a look at the DXY chart and why I said this. So if we take a look at the dollar chart, so this is the dollar index. We've seen a lot of upside on the dollar. At some point, you would actually expect price to start pushing down. So obviously we have a catalyst on Wednesday, which is the CPI data. So trading this one ahead of the data is going to be really, really, really risky. And I'd really not like to put myself in that type of scenario, to be honest, because I have no idea how this one is going to play out. But personally for me, I might be staying away from GBP USD buys should we get a punchy data. But it's just also something to look at. It's just also something to actually, you know, observe in terms of trade outcomes for a possible hawkish outcome. So yeah, that's all I have for the preview for the UK jobs data. And I hope this one was very helpful because I actually tried to go in depth talking about the reasons why I picked these numbers for a dovish outcome. And yeah, if you have any questions, guys, please hit me up. Let me know if you have any questions. I'm always happy to help.